So this is a very, very fast revision of your next five ratios. The next five ratios, that means a ratio 6 to 10. Okay.
Yes.
Ratio 6 to 10, quick revision. What is your ratio 6 to 10 that you should know? Can you give me the five?
Gross profit ratio.
6 to 10. I'm talking 6 to 10. So it would be the interest coverage ratio. It is the interest
E.
coverage ratio plus all your turnover ratios.
Yes, yes.
Okay. Interest coverage ratio. What is your interest coverage ratio?
Interest coverage ratio is this thing net profit before interest and
Net
tax
profit before
divide
interest and tax divided by your fixed interest charges.
fixed
Net
interest
profit
charges.
before interest and tax divided by your fixed interest charges. What does it tell you? It tells you how many times your net profit can
Yeah.
pay your trade receivables.
Yes.
Now you have your four turnover ratios. So whenever you have your turnover ratios, your numerator would always be what?
Their
Your
this thing
revenue.
credit sales.
Okay. Your
Yeah.
revenue, your cost of sales, or your purchases.
Purchases.
Okay. So
Right.
when I talk about the trade receivable turnover ratio, it would be your credit revenue. What is credit revenue? Your credit sales.
Credit sales. Yeah.
When I talk about trade payables turnover ratio, your numerator would be your net credit purchases. What does this mean? Your credit
Credits.
purchase.
Credit purchases.
Working capital turnover ratio, that means your total revenue.
Revenue from operations. Yeah.
Your
Total
total
revenue.
revenue. Total revenue means your total sales.
Yeah.
And when you have your inventory turnover ratio, inventory is always valued at cost. So here it would be your cost of revenue, so it would be your cost of sales.
Yeah.
Okay. All the turnover ratio would give you answer in times.
Yeah. Times.
So trade receivable turnover ratio, it would be your credit sales over average trade receivables. What
Average
is
trade
average
receivables.
trade receivables? Average
Yeah.
trade receivables is what? Average trade receivables would be your opening trade receivables plus your closing trade receivables.
Oh. Okay. 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 Yeah.
Average trade payables would be your opening trade payables
Opening
plus
trade
closing.
payables plus closing trade payables
Opening
divided
trade
by 2.
receivable plus closing trade
Yeah.
receivables divided by 2.
Yeah.
Average trade payables would be your opening trade payables plus closing trade payables divided by 2.
Sure.
Working capital, current
Current
assets,
asset minus current liabilities.
average inventory,
Average inventory.
opening inventory plus closing inventory
Closing
divided by
inventory. Right. 2. Okay.
Okay. So what does your trade receivable turnover ratio tells you? In a year, how many times you are collecting money from your trade receivables?
Yes.
What does your trade payable turnover ratio tell you? In a year,
The amount of in
times
a
you are paying your trade payables,
yeah.
your credit
Yeah.
suppliers. What
Yeah.
does your working capital turnover ratio tell you?
Just think the efficiency of
How
revenue generation.
efficiently you're using
Yeah.
your working capital to generate total revenue.
Total revenue. Yeah.
Okay, what does your inventory turnover ratio tell you? How
It
many times
measures
you are
how effectively a
converting
company manages
how many how many times you're converting your
yeah,
inventory into sales? How
sales. Yeah,
many
yeah.
times you're converting your inventory into sales? These are
Inventory into
very
sales.
important ratios. They are
Yep.
usually as interest coverage, trade receivable turnover ratio, trade payables turnover ratio, working capital turnover ratio, inventory turnover ratio. If you're watching
Yes.
this quick revision, what you have to do is you write the name of the five ratios and try to recall the formula before going to the next video. Please remember, every video would have one section where you am explaining the video and the formula. And this is just a quick recap. which you have to do before the exam. Okay.